Well, let's get back to tracking stocks and talking about fundamentals of all the names that we're tracking. We have Amnish Aggarwal, the Director Institutional Research at PL Capital, who joins us on the show. Hi, Amnish. Thanks a lot for joining in. Let's talk about Hindalco first up. Novelis's numbers, they indicated it's going to be an improvement. Bang on. Good improvement being seen out there because volumes improved. You had pricing as well that's pretty okay. However, scrap pricing is going to be at an elevated level. And because of the uncertainty on the geopolitical front, that's why, in fact, the management has not given a guidance, which could be viewed a bit negatively. What's your view on Hindalco post the recent run that we've seen on the stock?
Hi, Nigel. So, you see, the main thing is that Hindalco, I think, as far as your Novelis is concerned, giving a guidance is not an issue because as far as your aluminum prices are, I think, strong, the domestic operation will also continue to do well. Their capex plans, they are on track. And I think in the current scenario with firm aluminum prices, yes, Novelis on its own, because it is more like a converter, there could be, you can say, some ups and downs coming over there. But if you look in totality, I think Hindalco still continues to look quite good.
Hindalco looks good even from here on. Got it. What about Tata Steel? Numbers in line, and the management has raised this ambitious guidance about, cutting costs by close to 11,500 crores in the next year. I'll speak to the management later today, but those numbers looked okay, and now things could improve from here on. Would you be a buyer at around 150 rupees?
Yeah, you see, in Tata Steel, for example, this your cost cutting that is primarily in the overseas operations, like, for example, your Tata Steel Netherlands, Tata Steel UK. And given the fact that your raw material prices are slightly benign and overall your product prices are firm, so the near-term outlook for the steel stocks in general and for Tata Steel in particular looks good. But I think the major determinant here will be the cost cutting of 11,500 crores which they are suggesting. Because if you look at the history of all the operations overseas, I think that is where they have been faltering from time to time. So if they can achieve a significant part of the cost-cutting measures which they are suggesting in the overseas operation, then I think that could provide some sort of an upside in Tata Steel for sure.
Yeah. Amnish, hi, good morning. For markets broadly, is the tone going to be a lot more constructive? Look for ideas you want to buy. I think a lot more interest will start to come back. The big cloud, of course, was much slower global growth because of US and China. And that perhaps that some of that cloud has been lifted, hopefully, at least for 90 days to begin with. What's your sense?
You see, there are two ways to look at it. First of all, as far as your global growth is concerned, there was a lot of uncertainty. If you look at past, particularly from the beginning of April or the middle of March, given the kind of, you can say, tariff wars which were likely and the uncertainty which was there. So definitely, I think one after another, many countries now, they are entering into, you can say, the trade agreements with US. And in addition, some of these countries are also entering into, say, a trade agreement, for example, India and UK. Concluded at free trade agreement. So I think all those things where your tariffs eventually on a global scale come down will be beneficial for increasing the demand on a very, very broad basis. Now, when it comes to the other part of it, you see the Indian markets, if you look, they are driven not only by the global markets, but also by on the domestic side. Now, if you look at the private final consumption expenditure, so that bottomed out in 2Q and after that it is going up, inflation has cooled down. And now with monsoons likely to be normal, benefits of tax cut, I think slowly we will see the momentum even building up in the domestic market. So if the domestic demand picks up and we don't have any incremental problems coming on the, I would say, the borders due to any war or something, I think we are poised for a very decent year in the coming few months. I think the markets should continue to remain quite firm from here on because the valuations had corrected; they were not that expensive. So if the earnings catch up is there, then I think we are in a very sweet spot at the moment.
Yeah, that's the big hope that, we get back our mojo with respect to earnings. Amnish, actually on that, let me ask you, that's exactly the point. We're almost winding down the season. And as always, we start with bigger expectations and we go through some downgrades. At PL, what is your estimate? What's the extent of downgrades right now? And at FY26, where are you at? Which then brings me to the broader market question. From a valuation standpoint, I mean, is there still something left on the table?
You see, the main thing is which, for example, in case of say FY26 or 27, I think maybe a couple of weeks down the line, I will be able to give you the firm numbers because there are some large pockets of the sector which are still left. But what I can tell you is that as of say your last weekend, if I look at the overall variation in the results which have been operated, surprisingly, the numbers they have been, you can say, higher than what we anticipated. For example, there's a big weight in oil and gas, but even if I remove oil and gas, the kind of pressure which was anticipated, the kind of negative vibes which was there, the numbers surprisingly have been much better than that. So the numbers, I think by maybe 2 to 4%, if my memory is right. So the numbers have been actually higher. So that gives us a lot of confidence that first of all, the probability of an incremental EPS cut happening for FY26 and 27, that looks very, very tough now.
All right, Amnish, thanks a lot for joining in and filling us in with your quick take on all the stocks we discussed.